0.32%. Let that number sink in for a minute. Yes, that is the number, that is the percentage of Black founders that received venture capital funding in 2025. The actual number for Black women founders is much less than that. And according to the searches that I've been doing on the internet, the exact annual decimal figures for the specific 2025 calendar is very hard to track. You know why? Because nobody wants to have that conversation. And I don't blame anyone because I don't want to have that conversation too because it's embarrassing. Instead, I want to flip the conversation. Yeah, we know VC has a race problem. We already know that they have a gender problem. And yes, we do know that there are Black founders and Black VCs and Hispanic VCs and women VCs that are out there, but they rarely get the shine. So I want to take the time for this next couple of episodes to start conversation. I want to talk about it because I'm tired of the same old tired headlines, the same old complaints that I see on social media. Black founders need money, we need capital, we don't need mentors. But there's a whole other conversation that we're missing out on. In today's episode, I want to start the conversation. I want to kickstart it. It's going to be 3 episodes that I'm doing in this series. Plus, I'm going to have a detailed discussion with several people who are in the industry so we can get to the bottom of this and start changing the narrative and changing the way we have the conversation about funding. So, before we do that, ask yourself 2 questions. Do I have what it takes to get funding? And if I do, why am I not getting funded? And what do I need to do to change that? Welcome back to another episode of Mogul Chicks Chat. I'm your host, Adrienne Graham. I'm the CEO and proud founder of Mogul Chicks, and that's Chicks with an X. I am a serial entrepreneur and a self-made businesswoman who is a strategic business growth advisor, talent management strategist, published author, mentor, investor, and podcast host. Mogul Chicks helps female founders grow and scale profitable, job creating companies and eventually get them investment ready. We also help groom them into dynamic leaders and CEOs and build legacy wealth in the process. Mogul Chicks is a mindset, a way of life, if you will, and a blueprint for female founders who want to build a legacy of wealth and a generational business empire. We provide strategic business growth solutions and a platform for resources, mentoring, networks, education, and media that shares our stories. Our mission is to take your company from flat to profit generating to job creating to investment ready. My personal mission is to help you build and run a better company, reimagine the way you do business, and build lasting wealth. Oh, and before I forget, make sure you tag Mogul Chicks using the hashtag Mogul Chicks Chat on social media. Make sure you rate the show and leave a comment. It helps people find us. Share the love, share the love. Okay, let's get into it. Today, we're going to have a conversation that I already know is going to make some people uncomfortable, but not for the reasons you think. And that's fine because we need to have this conversation. There's a broader conversation that needs to be had that does not include, hey, they're not funding us. We need to go deeper. We need to go beyond that conversation. And I don't see many people having this conversation. So yeah, I'll be the first one to step in and step out on faith and do this conversation because again, we need to have it. Now, there's been a lot of conversation on social media about Black founders specifically and venture capital. There's been conversations about women in venture capital, about who gets the access to funding, who gets invited to the room, who gets the introductions, who gets second chances, and who gets told no before they even have a meaningful conversation to make their case. Now, one of the things that I see the most searched or the most talked about topic, especially on threads, is Black founders don't need mentoring. They don't need programs. They don't need accelerators. They need funding. They need access to capital. And that's true, partly. And before we go any further, let me say this clearly. The disparity is real. I know it's real. I've been in this space since the early 2000s, and I know what's going on out there, and I know how it hasn't really changed. Now, let me back up. It has changed because back then we didn't have as many Black VCs or women VCs or even angel investors as we do today. So yes, some things have changed, but not everything, and not in a good way. So this is a conversation that's not for somebody that's overly sensitive. This is not for somebody who feels just objectively discriminated against. This is not for founders imagining discrimination because they got rejected. And this is not one of those conversations where I'm going to tell you that if we just worked harder, racism and sexism will automatically disappear, because they're not. We know that. So before the conversation even gets started, let me make sure that you understand that I understand that, So for years, we've repeated the statistic that Black founders receive less than 2% of venture capital. Okay. In 2025, companies with a Black founder or co-founder receive 0.32%. That's less than 1% of venture funding in the United States. Not 2%, not 1%, 0.32%. That is 32/100ths of a percent. Let that sit for a minute. For a second, just digest that really quickly. Now, there's a myriad of reasons why, and we already know one of the main reasons is, of course, racial disparity. We get that, okay? Because when Black founders say they feel locked out of venture capital, there's real data behind that frustration. And women have their own version of this problem as well. So we're not disputing that. Companies founded solely by women continue to receive only a tiny fraction of the total venture capital dollars. And when you see statistics saying companies with women founders receive significantly more, pay attention to whether that data includes mixed gender founding teams. Those are two very different measurements that they're not capturing. So yeah, there's a problem, but I want to spend this series talking about what comes after acknowledging the problem. So I'm going to do a 3-part, starting with this episode, 3-part series, focusing on the different aspects of this. And then I'm going to finish it off with a conversation with several other women who can add some insight to this as well. Because I don't want you guys just to take my word for it. I want you to hear from people in the industry and people who are fighting this and dealing with this at the same time. Awareness is not capital strategy. Okay, just knowing, because like I said, I've been in this since the early 2000s. I've been a mentor at accelerator programs. I've been an investor. I've been all of that stuff. And the conversation never changes. So if the conversation is not changing, there's not going to be a good solution. Okay. Now, before I continue, let me just say there are funds out there like Fearless Fund who got sued. There's Backstage Capital. There's Queensbridge Capital, there's Serena Ventures. There's all of these Black-owned venture firms that are out there. So there are firms out there that are looking out for us. But you can't scream discrimination if they're not funding you. So there's a problem. There's a disconnect. There's something going on that we have to address and attack. Okay. Posting the statistic every 6 months is not a good strategy. That's just whining, actually. It really is. And waiting for the venture capital industry to suddenly become fair is definitely not a strategy to follow. So here's the premise I want you to keep in your head throughout this entire series. Bias is real. Bias cannot be your business strategy and cannot be the reason that you automatically get funding. And two things can be true at the same time. I said this in a Threads post. You can be discriminated against and you can be underprepared. You can encounter racial bias and be pitching the wrong investor. You can encounter gender bias and have weak economic units. You can be excluded from traditional networks and need to do a much better job deliberately of building your own network. And I know you might be saying, oh, Adrienne, but if we're not let in the rooms or if I'm not at the table, how can I get my own network? You can do it. I did it. Other people have done it. It just takes a little bit more. Addressing one of the issues does not excuse the other. If I help you become better prepared, that doesn't mean I'm excusing the discrimination. It means I'm giving you a level playing field, or as close to it as I can. It means I'm trying to remove as many reasons as possible for someone to tell you no. If you look at my websites, or if you heard me talk before, you know that I always tell people I want to strip them of every excuse for not giving you funding. So let's start off what the research says about Black investors. So it said the majority of a recent study said it looked at more than 160,000 U.S. founders and investors and examined racial differences in venture investing. That wasn't me. The researchers found that within venture firms, Black lead partners were more likely than white lead partners to invest in Black-owned startups. Remember what I said earlier about Serena Ventures and Backstage Capital and all of those? Yeah, they're looking to invest in what they say, quote unquote, is the underdog. Now, let me say this. I'm a Black woman, Latina woman, founder, a little bit older. I'm not an underdog. We need to stop falling for that narrative. Stop looking at it as, oh, they're underfounded because they're underserved communities and they're the underdog. No, we absolutely are not. Black women, Black people, Latinas, we have made incredible strides. We have built incredible companies, come up with wonderful ideas. We are not underdogs. So let's remove that from the vocabulary. Underdogs, underserved. Can't do that, okay? And here's why this part really matters. Those investments that Black and Latina and women investors make, that's not charity. Those are investments. They were not affirmative action investments. They were not inferior deals that someone made out of racial solidarity. Black founded startups backed by Black VCs or women VCs or Latina VCs showed a higher probability of a successful IPO or acquisition than Black founded startups backed by non-Black or non-women or non-Latina investors in that study. I will find the link to that study and I will post it in the show notes so that you can read it for yourself. But that matters. It matters because it raises a much more sophisticated question than, are Black investors biased towards Black founders? No, absolutely not. Because when we flip it and it's a non-Black investor, the number one bias is, oh, they don't want to fund Black or women founders or Latina founders. Okay? So we got to look at the deeper issue here. Maybe they have information that other investors don't have. Maybe they recognize market opportunities that other investors overlook. I've seen it. Maybe they have better cultural context. Maybe they understand particular customer segments. Maybe they have closer professional networks. Or maybe they can differentiate between an unfamiliar founder and an unqualified founder. Two different things. You can have the best business idea in the world. If you are not qualified to run the business, you should not be heading that business. You need to put people in place who can do the things that need to be done to make the business grow. That is one of the areas where we, and I'll say this as a Black woman, we look at our businesses as our babies. We don't look at it as a business. We have to remove emotion from it and realize when we are not equipped to do something and be able to bring in the person or people who are equipped. Let the ego go. Take that out of there, you know? Traditional VC relies heavily on pattern recognition, if you notice. You know, where did you go to school? What company did you work for? Who introduced you? Who has already invested? Have you founded something before? Do I know your advisors? Do you look like someone I have successfully backed in the past? That's pattern recognition. But the problem with that is that it can be efficient while simultaneously reinforcing exclusion, meaning, yes, the good old boy network. So yes, the bias does exist. So if your historical winners overwhelmingly came from like Stanford, MIT, Google, Facebook, Y Combinator, et cetera, what do you think happens to an equally capable founder whose resume and network looks completely different? You know, I went to Howard. I was on the East Coast. I've dealt with some of the biggest companies on the East Coast. You know, someone in Silicon Valley is not going to look at that. You know, I'm not saying it's right or wrong. I'm just saying that's the pattern recognition. That person from Howard could be just as qualified, maybe overqualified, more qualified than someone from Stanford. But because of pattern recognition, they appear riskier. Not necessarily because the business is worse, because the investor has less information. They have less of a frame. That is very important as a distinction. If I came to you, an investor, you're a white male investor with a wife and a daughter or whatever who loves, let's say, Korean beauty. And I'm a Black founder who came up with an incredible skincare line for melanated women. That man is not going to understand. His wife is not going to understand. His daughter's not going to understand. But because, and I'm just using this as an example, the K-beauty, Korean beauty, is the big thing, and a lot of our non-Black counterparts use those. He can go to his wife or his daughter and say, hey, what do you know about this kind of beauty treatment? And they can tell him everything, but go to something like a Carol's Daughter or something that's melanated, and they're not going to understand. They have less information and more personal bias. So now let's talk about women. Women founders deal with another dynamic altogether that I want you to understand before your next pitch. Research has shown that investors often ask male and female founders different types of questions. They do. I've seen it. Men are more likely to receive what researchers call promotion-oriented questions. How large can this become? How quickly can you grow? How much market share can you capture? What's the upside? Whereas women are more likely to receive prevention-oriented questions. What happens if a customer leaves? What if competitors enter the market? How will you prevent losses? How will you retain customers? What happens if your strategy fails? Think about that. Think about what that does to a pitch. One founder spends the meeting talking about possibility. The other spends their time in the meeting defending against catastrophe. And then everybody walks away saying the first founder sounded more visionary. Ladies, you need to hear the question underneath the question. If an investor asks you, how do you know customers won't leave? Do not spend the next 5 minutes trapped in defense mode. Answer the risk and then redirect the opportunity. You might say, well, our customer retention is 91%, which demonstrates that we have already mitigated a significant amount of churn risk. Most importantly, and don't repeat this word for word, but I'm just giving you an example. More importantly, that retention gives us the base to increase average customer value from X to Y over the next 18 months. See what happens? Risk, evidence, upside. You're not spending your time defending. And I think a lot of times we are put on guard to defend our data. And once you get into the position where you're having to defend your data within a conversation, you've already lost the battle. So you answer that question without allowing the question to dictate the entire frame of your company, and it's not throwing you off. So here's where I'm going to challenge you as a founder. Now I'm going to say something that founders do not want to hear. Just because venture capital is inequitable does not mean your company is ready for venture capital. That right there is the main conversation that a lot of people do not want to have. And one of the reasons why I created Funding School, because we may need money or we may see the vision and know we want to grow, but we may not be ready for it. And just because somebody declined to invest does not automatically mean discrimination caused the rejection. It could be you're not ready. Sometimes the answer is no because the investor was wrong. Or sometimes the answer could be no because the investor was biased. And sometimes, just sometimes, the answer is no because your company simply wasn't ready. Part of becoming a sophisticated founder is learning to distinguish among those three. And here's another misconception I want to kill right now. VC is simply not money for business that need money. In other words, you can't just go to a VC because you need money. Oh, well, we're running out of money. We're burning money, or we're not making enough money, so we need money. Please stop doing that. Please. Venture capital is not simply money for businesses that need money. It's not. And I have a sneaking suspicion that a lot of these conversations that I read on Threads and LinkedIn and Facebook and whoever else, That's what it is. Because my first question when I see that is, well, what do you need money for? Why do you need money? Are you making money? And that's not a failure. It's not. A business can be profitable, scalable, successful, and worth millions of dollars without ever taking $1 from a VC. I have seen it happen. Not often, but I've seen it happen. VC is designed for a very particular type of company. And I always tell people, you got to be ready. This is like a marriage, and you got to be ready for everything that comes with it. There have been times where I've seen people take VC money and ended up getting kicked out of their own business. So you got to be real careful before you decide what path you want to go down to get VC, to get funding, period. Usually, investors are looking for businesses with the potential to become extremely large, extremely quickly, because the economics of venture funds require a relatively small number of investments to produce outsized returns. In other words, they're giving you money because they want to get money in return. They want to know, how are they getting their money back? You ever heard on Shark Tank, Kevin O'Leary? He says, when I send my money is little soldiers. When I send my money out, I expect them to come back and bring friends with them. That's what it really is. They're looking for businesses to produce outsized returns. They expect it. There is no guessing. They want to know, how am I getting my money back? When am I getting my money back? And at what profit margin? That means some of you are trying to solve the wrong problems. You keep asking, why won't VCs fund my company? And I need you to ask, why should my company be funded by a VC? Those are two completely different things. You may need angel capital. You may need debt. You may need grants. You may need revenue-based financing or a strategic investor. You may need acquisition financing. You may need a line of credit. And some of you don't need another investor. You need more customers. See, we're not digging deep into that. Everybody's in panic mode, trying to say, oh, well, no, I just need funding. I need funding so that I could survive. If you need funding so that you can survive, you've already lost the game. So all of those reasons is why I created the app CapFlight. I got tired of watching founders decide that they needed venture capital before anybody had any actual diagnosis based on what kind of capital they thought made sense for the company. CapFlight forces you to look at your readiness. It focuses on stage, traction, scalability, capital needs, equity expectations, investor fit, and the actual condition of the company. So before you spend 6 months trying to get introductions to VCs who probably are not ideal for you, maybe we should figure out whether VC belongs in your capital strategy at all. And that's okay. So let's shift your thinking. Here's what I want you to take away from this episode. Stop asking only, why aren't they funding us? We absolutely need to be asking that question at every level. But at the company level, I also want you asking, what kind of capital does my company actually need? What milestones do I need to hit? What evidence am I missing? Who are the right investors for this stage? Who are the right investors for the next stage? Where are my network gaps? What would make this company meaningfully less risky? And how do I make the opportunity too compelling to casually dismiss? Because here's my philosophy. You cannot control every bias someone carries into the room, but you can control what you bring into the room. You can control your numbers, your preparation, your investor research, your market knowledge, how well you understand your economics, and whether your data room is organized. You can control whether you know exactly why you are raising money and exactly what that money is for. You know what it's supposed to accomplish, and that's power. Not perfect power, but meaningful power. So, here's your assignment before the next episode. Do not start by redesigning your pitch deck. If that's what you got from this episode, then you wasn't listening, and I want you to go back and re-listen to this episode. Start by determining whether you are actually ready for the capital you're looking for. If you haven't already, go through CapFlight. You can get that on Apple, or Android, and assess where your company actually stands. Because in the next episode, we're going to get very specific. I'm breaking down 7 reasons founders get rejected that you can actually do something about. It's not racism, sexism, or systemic access. Those matter. But I want to talk about the things sitting on your side of the table: your numbers, positioning, evidence, milestones, your network, investor selection, your readiness. Because fixing those things doesn't make discrimination acceptable. It simply makes you more formidable. I'll see you in the next episode. Make sure you're ready. I'm Adrienne Graham, CEO and founder of Mogul Chicks, and this has been another Mogul Chicks Chat. I want to help you build a better, more profitable company. Make sure you check out the other episodes, and if you like what you hear, share the love. Pass the link on to your friends. You can find this podcast wherever podcasts are streamed, and of course on the Mogul Chicks website. Make sure you subscribe, and if you do, leave a comment on any or all of the channels. It helps other people find the podcast too. Sharing is caring. For more information about how we work with you to grow and scale your company, visit us online at mogulchicks.com, send an email to contact@mogulchicks.com, or you can connect with us all over social media at Mogul Chicks. And remember, that's Mogul Chicks with an X. If you're not yet part of the Mogul Circle, if you're doing over $1 million in revenue annually, what are you waiting for? There's so much value in memberships and the community. If you prefer a good program or trying to move beyond startup phase, check out the Mogul Chicks Academy at mogulchicksacademy.com. I'll catch you on the next episode. And remember, Mogul Chicks are always a step ahead of the crowd, and they're always closing deals. Mogul Chicks make mogul moves and power plays. Your move. Now go be profitable. Bye.